SoFi Technologies, okay, are they a bank? A tech company? Maybe dabbling in crypto. It's not entirely clear, is it?
Yeah, they definitely wear a few hats.
And the market seems pretty excited, maybe confused, but definitely reacting. Yesterday's trading after earnings was, well, wild.
Explosive is one word for it.
Right. So the big question for you listening is, can this momentum actually last, or is the air getting a bit thin up at these levels? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're diving deep into SoFi today. All the data we're using was captured this morning, October 29th, 2025, around 8:55 a.m. Eastern Time.
And, before we jump straight into SoFi itself, we should probably look at the bigger picture, the environment they're in.
Good point. What are we seeing?
Well, market futures are green this morning, suggesting some optimism. But our research flagged something pretty important.
Okay.
U.S. consumer confidence. It just dropped. Again, that's the third straight month.
Oof. Third month. Where does that put us?
Lowest level since back in April. And that signals, real anxiety about a slowing economy.
Which definitely matters for a company like SoFi, right? Given their focus on lending and consumer finance.
Exactly. It's a significant headwind to keep in mind.
Okay, so headwind noted. But let's talk about the company's actual performance, because fundamentally, Q3 looked amazing.
Oh, absolutely. A blockbuster quarter, fundamentally speaking. Record revenue, what was it, $950 million?
$950 million, and record net income to $139 million. Just blew past what everyone was expecting.
Way past expectations. And they're not sitting still either. They announced new stuff, like that blockchain payment service.
Yeah, and the AI cash coach thing. Seems like they're really executing on that growth plan.
They really are. Perfect execution on the strategy side. But, and this is the big but.
Here it comes, the valuation.
Precisely. The performance is stellar, no doubt. But the stock price, it's trading over $31 right now.
Okay.
Our deep dive, when we look at the actual cash flow, strip out the noise, our estimated fair value comes in around $13.54.
Whoa, wait, $13.54 versus over 31? That's a massive gap.
It's huge.
So how does that make sense? Are you, the investor, just buying the future dream of this financial supermarket and ignoring today's value? Or is it just market frenzy?
Well, it seems like Wall Street is wrestling with that exact same question. The consensus among analysts, it's a firm hold.
A hold? That sounds non-committal.
Very, and get this, literally half of the 22 analysts covering it wouldn't pick a side. Buy or sell, just hold. That signals some serious skepticism about justifying that 31 price right now.
Okay, so that skepticism sets up this really interesting tug of war, doesn't it? The bulls versus the bears. What's the sentiment story look like?
It's pretty stark. On one side, you have the options market, very optimistic.
How optimistic?
The put-to-call ratio is down at 0.47.
Right, so just to clarify for everyone listening, under 1.0 means more calls, bets the stock goes up, are being bought than puts, bets it goes down. And 0.47 is, well, that's pretty bullish.
Decidedly bullish, yeah. Lots more calls than puts changing hands. And the most popular bet, they're targeting the $35 strike price, coming higher.
Okay, so the options crowd is optimistic, but they're running into a wall, aren't they? What about short sellers?
Yes, the bears. There's significant short interest here. It's sitting at 8.49% of the available shares.
Nearly 8.5%. That's a notable chunk of shares betting the price comes back down. A potential wall of sellers just waiting.
It absolutely is. A big contingent betting that the fundamental value, that $13 number we talked about, eventually wins out.
So who's winning this battle right now? Bulls or bears? What are the technicals telling us?
Well, technically, the picture is strongly bullish. The chart looks very constructive.
Across different time frames?
Yep. Short term, medium term, long term. The underlying trend is powerfully upward.
And crucially, this surge yesterday, it wasn't just a price move, right? Volume was huge.
Exactly. That's key. The breakout came with a massive surge in trading volume. That shows conviction. Real money flowing in, not just random noise.
Okay. And momentum. Is it overheated?
It's accelerating, definitely. But looking at the indicators, it's not quite in what we'd call the red zone yet. Not extremely overbought. So technically speaking, there might still be some room to run.
Okay, so putting it all together, strong earnings, yes. But macro worries, stretched valuation, bullish options, bearish short interest, bullish technicals. What's the verdict?
Synthesizing all that, our research leads us to a strategic verdict for the next, say, several trading sessions.
Yeah.
Of cautiously bullish.
Cautiously bullish. Okay. Even with those big risks.
Yes. And we have to acknowledge those risks up front. One, that glaring overvaluation. Two, the shaky consumer confidence backdrop. And 3, that significant 8.5% short interest. Those are real dangers.
So why the bullish tilt then, despite those pretty major concerns?
It really comes down to the catalyst and the technicals.
Yeah.
Those record earnings acted as a powerful catalyst.
Okay.
They triggered a technically, well, almost perfect breakout, and it was confirmed by that huge volume. And in the short term, that kind of explosive, high-conviction price action often tends to overpower longer-term valuation worries. Momentum can carry things for a while.
Got it. So what are the key levels you're watching? Where's the battleground?
For the bulls, the major target seems to be that $35 level where those call options are popular. But critically, if the price breaks below $29, that was yesterday's low, then this whole bullish short-term thesis is basically invalidated. That's the line in the sand.
Right. Below $29, caution turns to something else.
Exactly. The bullish case weakens significantly there.
Okay, so it sounds like investors are definitely rushing into SoFi's vision of being a financial supermarket, but as you've laid out, you really need to be aware of that steep price tag and the underlying risks before you decide to check out.
Well put. Awareness of both sides is key here. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next deep dive.